Here we go. We are live. Good morning to everybody. Catching us on Behind the Markets. It's Wealth Wednesday. Today, we're going to be discussing a few deep topics, some of which include student loans. Again, Vernon, that conversation does not seem to be going away. It's back and bigger and better. We're going to discuss, obviously, ZCCM, a little bit of the turmoil that's there. There is data coming out from Madison and Zafico, but we'll be going through that tomorrow for anyone you want to sneak in for those financials. We're just analyzing them quickly in the back end. And at the same time, Brendan will be going through what I call starting simple, starting small. Okay, especially when it comes to investing. This is what we're trying to get to people to do. But how are you doing, my brother?
I'm doing super well. We're superb. It's one of those seasons, my favorite. It's cold season, so I'm doing absolutely wonderful. How are you?
Why is cold season your favorite, Brendan? Why is are these things we
The
cannot
cold
discuss
season,
on a family show?
it brings people together.
Ah, 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 ah. This is predator behavior, Brendan. This is predator behavior. Taking
I
advantage of
think
the.
that the warmth, brings around the ambience of coffee, comfy scenario at home and whatnot. I think it just brings people together.
Before you have to explain this conversation to your church elders on Sunday, but then perhaps let's just stop for now before your church elders summon you and sit you down. Now let's get into today's conversation on Wealth Wednesday. We'll be talking about obviously small steps and stages. Now let's start with today's roundup. We did see that the Kwacha has continued its loss again. We're in a long spree of losses again on the currency. We've had them from the time we've seen the end of that strengthening cycle, and now we're back here in terms of losing, especially after there was that announcement of the new credit to date. Obviously, the president has been pushing back against that, saying that we need to have meetings now. But it's their pace, it's their decision. It's quite difficult either way. 0.63%. We saw the dollar gain value yesterday, up 1.78%, down 9.82%. The dollar is back in the positive year to date, 0.54%. So you can see that we are in a buying cycle currently for USD. In terms of the stock market, we saw it close yesterday with zero changes, 1.65% against the week, 2.89% against the 30 days, and 11.08%. Stock market still the leading market right now. We are seeing also that bond index moved up by 0.9%, but in dollars went down by 0.47% due to the US dollar change that we're seeing there. And we're seeing that composite interest rates are down by 0.01%, mainly showing that we still are edging towards buying, but not fully there. So that is the main board summary for the ninth. But we did see that in terms of other FX rates, the rand lost value yesterday, slipped a little bit by 0.1% due to a weaker rand. As everyone is waiting for U.S. inflation data to see what's going to happen, is the Federal Reserve signaling? Is that going to now signal to the Federal Reserve to ease up more or ease up less? That's expected to come out today. We are seeing that year to date. Year to date, USD up 0.54%, Rand year to date down 7.8%, but on the week up 0.62%. Remember, cross border traders are going to be importing that inflation, but on the month, remember that cross border traders are bringing you cheaper goods on the month, 11.96% cheaper because of the Rand. So think about that. Unfortunately, whether South African inflation has gone up by less than 1%, but you've seen the 11% decline. For cross-border traders, those are bigger profit margins or at least lower prices that can be extended to the consumers. Now, GRZ bond index did move up by 0.9%, up 9.9 against the year. And you're seeing that in dollars up 9.31 because obviously the loss of the strengthening of the dollar recently. And we've seen that interest rates are up 0.37% year to date. So we are seeing interest rates starting to pull down a little bit, especially since mid-April when they spiked up to 24.88. Now they're down to 24.01, lower than they were 2 months ago. And we're seeing in terms of the US dollar index is a flattening, but it's the domestic bond index that gives us the signs of hope. Now, in terms of commodities, we did see that copper moved up 0.49% on good news in China, that we are getting lower. We're getting some supply shortages. We're getting storage shortages in China, which is leading to them demanding more and more copper. But oil was also up 0.73% yesterday. Obviously, on recession fears starting to wane, still down 9.86% on the date. And we also did find that gold is up 0.66% on the fact that yes, there will be a recession, but just not as strong as we expected. And gold seems to have found a $2,000 support in ounces. But in terms of Nkwacha, this is your wealth insurance assets. Bitcoin back up about 500,000, up 1.1%. After a loss of 4%, it's back up 1.1%. So you can see all red in the 1 week, 1 month, and then 1 year, and only up year to date on 67.18. You're seeing Ethereum also went up 0.8%, up 1.3% on the week, but down and up 54.23%. Gold up 1.29% yesterday on the day, up 2.2% on the week, and 12.47%. So gold is starting to outpace the stock market in terms of your conventional assets that you should be investing in. So this is our broad spectrum of assets and how they've been operating in dollars as of yesterday, the 9th of May, 2023. We did see that bonds up 9.9%, stock market up 11.1%. The dollar is up 0.5%, but you're seeing in terms of real returns, we are seeing gold is up 6.4% versus the 12.5% nominal, and then 5% stock market, 3% bond market, and negative on dollars 5.6%. Now take a look at obviously the crypto side, but remember that those are highly volatile assets. Trying to chase returns there, I promise you, if you don't listen to me when I tell you, if you just look at this chart, jump like a Mexican jumping bean, and decide that you're going to start investing, you will get your fingers burnt most likely. Okay, you do this stuff methodically and under guidance if you are willing to listen. That's just me pointing that out. Now, in terms of the crude oil pump price, this is where we are in the first 10-day read. Remember that we've got our first half of the month reads that we're picking up here. 26.89 is what we're expecting on the price. Down to be expecting it to drop down by about 2.53%, because there was no movement last month. We are expecting that, obviously, that's mainly because of a 10.17% decline in barrel prices of crude. So crude prices might come down. And obviously, if you've got lower diesel prices this month, that should translate eventually to lower barrel prices, because remember that you're bringing in oil by truck and tankers use diesel, so therefore cheaper transportation costs should be bringing that into Zambia. Now, in terms of the four horsemen, what are we seeing? Not much happened yesterday, but we did see that Mexican inflation declined for 3 months in a row, while oil inventories built up to show demand fragility. Now, that's good nor bad on either side. Spanish short-term interest rates rose again, while UK housing prices declined for the 10th month. I've continued a 10-month slowdown in housing growth. In terms of bigger stories that have come into the market, and domestically, and we're going to go deep into this story today, Vernon. Higher Education Loans Board seeks to reduce interest rates on student loans. Confetti has been thrown at UNZA for that one, just to hear that conversation. We're going to go deep into it. ZCCM to engage the London Stock Exchange over the suspension, citing that the main delay has been due to the fair valuation of the 90% acquisition of Mopani in their audited financials for 2021 and 2022. So that's been a big issue. Remember that big Mopani deal that happened at the end of 2020 going into 2021. So that's been the big conversation. The IMF has warned that there will be a reduction of foreign loans to countries like Nigeria and the rest of African countries due to the global economy experiencing new shocks and contractions. That's obviously giving a lot more of a problem. Copper prices rose on Monday and have continued to rise due to low inventories cushioned after the prices fell for 3 straight weeks, mainly due to the fact that there's been low inventory levels in China. Gold prices rose because of safe haven demand and uncertainty over the U.S. debt ceiling conversation. So that's pushing the gold price. Remember that there's a serious issue here that might actually catapult into a market downturn. So people are stocking up on gold as the U.S. government is trying to get into debt negotiations between the two parties. Kevin McCarthy, Joe Biden, and his team in the Senate are trying to figure things out. Oil recoups losses because of these. The strategic petroleum reserves being refilled in the U.S. due to higher seasonal demand, while Europe is forced to pay up for oil like Russia's as options run low. Iraq and Saudi Arabia are hiking prices of denser oil to Europe. So it's wild for the Europeans. And therefore, inflation, they've got no choice but to start playing ball with Russia, who says, you thought you were smart. Now we've got you. Right. Other news that we also seen as well is that a fresh wave of COVID-19 has been spreading through China as people return from the public. What's up with these people and their holidays? This thing always spreads their holidays. And I've noticed with China, there's always like a Chinese holiday, like a 5-day holiday, and bang, like a huge outbreak happens.
Mhm.
Okay. In fact, this thing started with them going on holiday. There's always something harsh. Now the public holiday traveling reached the trading floors, raising concerns of an impact on trading volumes, albeit likely not as pronounced as the previous pandemic-induced disruptions. So it's just a mild one that's coming in, but everyone wants to keep an eye. Now remember, the World Health Organization did deem that COVID-19 is no longer a global emergency. They've actually removed it from the category of global emergency. Though, let's be honest, Vernon, Africans did that after a while. They were like, hey, yeah, whatever, man. We deal with Ebola every week. That's what Africans are saying. We've dealt with Ebola, we deal with cholera. You want us to be afraid of this? We've got bigger issues that are taking us out. In fact, I think that cholera already here did so much damage already. Like, if you want to see what really shakes like Zambia, and you know the funny thing, Vernon, is that when the world, the global economy or the global society was shocked and said, "How come Africans had such great response to COVID-19?" And one of the things that came out was because Africa has got constant health emergencies anyway, our response teams were already alert. So we actually have response teams that are already in the zone when something breaks out. Like our guys are on the ground fast. Okay, because we're waiting for any cholera outbreak, any pandemic, like anything just happens in this place. You'll just hear, no, Ebola has broken out in DRC again. So we have to be prepared for this. So there's a lot of preparation that is actually involved with the African teams that led us to actually handle our pandemic a little bit better. That was a strong factor that I think played out for Africa. Now, obviously, vaccination levels were low, but that's a different story. But I think our preparedness was there. And also, look, Africans don't sit indoors a lot. You know, we work outdoors a lot. So I think that's what maybe people don't get. We actually work outdoors a lot. So I think that affects our abilities here. So that's one of the major stories I think we need to pay attention to. But yes, pandemic woes, I think, are now officially not as big a thing. We also are seeing that PayPal's cryptocurrency holdings were up 56% quarter one from the last year, where they were holding about $600 million. Grayscale is going to introduce 3 more crypto funds. Grayscale is the one that's leading a lot of institutions into investing in cryptocurrency. And the Bank of England's director of fintech, Tom Hutton, says cryptocurrency does not fulfill any functions of money. He does not see it as a store of value. He does not see it as a medium of exchange. And he does not see it as a unit of account. Look, the reality is no one's running their business saying we're selling in 3 Bitcoins. No one's doing that. Nobody's doing their nobody's doing nobody's using crypto as a medium of exchange. It's an asset that they're holding. It's a piece of property that they're holding, but they're not really exchanging much with it. They're using it to send money. Yes, it's a technology that's being used, but it's not being fulfilling that. And it's not, nobody's, as I said, nobody's balancing their books in it. Nobody's exchanging in it. And it's not a great store of value due to the volatility of the market. Though that's finally starting to hold. Bitcoin has actually held quite a strong range for a while. And that's actually showing much better. Not those days where it would be 20,000, 60, 15, then 30. Hey, BP levels were high when that was happening in the crypto space. So that I think is the main criteria there. Now, just on a bit of lighter news, Vernon. There's a story I remember from a friend of mine. A friend of mine was at school in Atlanta, and he was telling me that there were, and this just goes in line with the whole pandemic preparedness thing. Now, he was saying that one time there was an E. coli breakout. In other words, a stomach bug broke out, and everybody got sick on campus. Everybody got sick in the US. Now, and except for the African students, and then everyone turned around and said, "Hey man, how come the African students aren't sick?" And they're like, "Dude, have you seen the water we drink when we're at home?" Guys, we drink water from the ground. You people purify it 7, 8 times. So
Yeah.
Africans are resilient. We
Yes,
are
we
resilient.
dealt on that.
And this is, in fact, let me put it this way: our immune systems, though we do die of things a lot, unfortunately, mortality rates can be really high in Africa, but it's avoidable things. Our immune systems are anti-fragile because we're exposed to so much. We're exposed to so much that it actually affects us. But anyway, I'm not going to get into the medical debates of COVID-19. Lest we start getting shut down here. Facebook is still censoring people. And Mark Zuckerberg
Mhm.
is practicing jujitsu now. Have you seen his page? The man is busy showing that he's actually practicing jujitsu. So the last thing I want to do is get involved in that. Right now, let's get into the main story for today, the deep dives, which is student debt. Now, the higher loans and the Higher Education Loans Board has actually sent a proposal to the Ministry of Education to adjust the interest rates down from 15 to 10%. At a recent political visit at UNZA, the student union appealed to the president of Zambia to lower interest rates because he said they were killing a lot of the graduates. 4-year degrees still carry a potential price tag of close to $200,000, 200,000 kwacha for the 4 years there, versus the average degree holder with a potential earnings of just around 8,000 kwacha per month. Now, I'd already flagged this issue as one of the 8 policies I think we need to start working on, especially for this next budget cycle. In that, I think we need to start pegging the interest attached to student loans either to one, inflation, or two, to the Bank of Zambia interest rate. That is what I think we need to do. Set it according to inflation or the Bank of Zambia interest rate, so that there is an external system that's designing what the interest rate would be. That would be the most advisable thing, I think, for us as a society. But I think people are harping on the interest rates too much, okay, because they don't understand that there are two primary problems with this. So let's get into what a student loan is, Vernon. So instead of you being paid for university or you paying for yourself, one of the things that is happening is that the government has offered you a loan. And they're saying, look, instead of you going to the government, we're going to give you this instead of you going to the bank, we're actually going to give you this education as a loan that you're then going to pay back through your working life. And we're going to find you on your payslip because we're the government. We can find you on your payslip the same way we could use tax authorities, and we can deduct. So when you sign for it, it is the government that's just going to find you. And believe you me, Vernon, they will find you. Okay? There are people who just got shocked when they said, they just saw deductions, and it was wild. But especially the newer ones. And you see, if they've caught you, and they're using databases like NAPSA, they're using databases like ZRA, they're using databases to find you. Okay, and then they're matching. So these electronic databases are now helping inter agencies of the government communicate with each other and reconcile with each other. So the loan from the government now has got a much stronger collectible source. So they're getting it from your payslip. They're not getting it from your bank account, Vernon. They're just fetching it from your payslip. They're telling your employer, that one, take it. Okay, so already I think this is one of the stress points everyone needs to understand. So when you're going into education, especially if you're going in now into college in your early days, recognize that this is a loan that is going to be recovered. Now let's look at some of the issues behind this loan. Okay. Now, this comes from the Higher Education Loans Board page. It said currently student loans are given to undergraduates joining UNZA, CBU, KMU, MKU, MU, CHAU, and KNU. Now, from these and from secondary schools across the country, the loans cater for, listen properly, as Jacob Gedlekhisa Zuma said, listen carefully or listen properly. Okay, they cover your tuition, your accommodation, your meal allowance, the ones you're dancing over, that's a loan. Okay, your book allowance and your project allowance. Students are required to repay the loans 1 year after leaving the institution of learning. So you are given a 1 year grace period, and interest starts accruing and they start the repayment cycle. So they give you a year to go and find work after you've graduated. And then they start now adding interest to your money, and then they start collecting. So just remember this, okay? So your tuition, which I'm going to go through some of the fees right now. Your meal allowance, okay, meal allowance is about 600 as of 2022. It was about
Mhm.
625 kwacha per month. Multiply that by how many months you're going to be on campus. Let's say 10 or 12, whatever it is. But it's 625 kwacha per month, okay, that you are given that meal allowance. Then there's your project allowance, which depending on which degree, but it can be from 900 to about 1,000 kwacha per year. Your accommodation is 3,900 kwacha at Unza per year. Okay, just remember that. So you are paying per year. So I want you people to get these numbers into your mind, because it's going to tell you how much your loan repayment is going to be. And for the purpose of helping people out, we've actually calculated these. Now, I gave people some understanding here of some of the terms and conditions. Your repayment period is 10 years. You've got your repayment commences a year after the completion of your studies. Not when you find a year after you've got a year. Go and find work for a year. Then 15% compound interest starting a year after the completion of your studies. This is actually from their repayment page that we got this from. Now, my advice, which I've given to people, is this: your loan balance, when completing, should be about 50% of 1 year of your annual expected income. So ask
Mhm.
yourself, the degree I'm getting, what does it pay? Ask yourself first.
Yeah.
Okay. Look at the cost of this degree, then look at, you know what? How much am I going to be getting in my first year of salaries? So if you're getting a degree that's 150,000 or 200,000, are you going to be earning 400,000? You see where the
Mhm.
discrepancy is. You see why people are getting gombolad here a lot, Vernon, because they're walking into a job market that does not pay this much. Okay, so the cost of education is not matching the salaries that people are getting. Yes, the average degree holder does earn about 11,000, but the average degree holder is a 73% chance of being hired. So really, your expected earnings from a degree is about 8,300 kwacha. 8,300 kwacha, you stretch that out over 12 years, over 12 months, that is 100,000. Your degree is 4 times more expensive than it's meant to be. A degree should be 50,000 then. Okay. If a
Mhm.
degree is
Mhm.
50,000 at the current wage rates that we're seeing, that's good. Now, the question, that's an average person. That's not a person coming straight out of college. Okay. A person coming straight out of college, Vernon, is going to be earning anywhere from 3,000 to 5,000. That's the truth. Only engineers straight out of college are earning 8,000 kwacha. The average person is earning 5,000 to 3,000 kwacha. So 3,000 to 5,000 kwacha when they're starting, when they start work. So already multiply that out by 12. Your degree should only 4 years of education should only be costing you 30,000. Okay. Now you are paying 200,000. There's a sustainability problem because of the price. Okay. So I'm just putting that out there. So it should not be exceeding 14% of your net income in terms of your monthly repayments. They should not. So I'm going to show you who actually benefits from this and what policies we could be using. Now, the second to fourth year, now you are advised. This is advice. You don't want to listen? Japa. That's your issue. Okay? You will burn on your own. But I'm just telling you now, the best thing that you might be able to do is 2 to 4 year. What part-time jobs can you do to start paying down your loan? Can you start interning at places like Money FM? Find small businesses. I'm not saying Money FM has jobs, people. I'm just telling you, I'm giving an example. I'm giving an example. We don't want to see 1,000 people outside this door next week. Okay, that's not what I'm saying. I'm giving an example. But can you start interning at places to earn what you can? Can you start hustling businesses, whatever you can, to make an earning to repay your debt? Okay. The problem is that if you are on a student loan, be careful of falling into the trap of the college experience. Oh, it's time to have fun. We're young, we're wild, we're free. You will not be free when you are repaying this loan, my friend. That is what you need to recognize. You will not be free. So that's what you need to recognize. So do the math, people. In those 2 to 4 years, unfortunately, once you've got a student loan, it requires a level of seriousness that is so important that you're going to have to focus, because starting your life with 200,000 kwacha worth of debt is dangerous. Okay? It is dangerous and it's difficult, and you're going to get frustrated. And even if we zero the interest. So now I asked myself a question. Let's look at the proposed rate, and let's look at even if it had zero interest. Now we did
Mhm.
our survey. we actually contacted the university. This is from UNZA. We actually got some of the data there on what is the cost of education, the total cost of education. This was the estimation we managed to come up with without any other costs added to it, no contingency, nothing. But 164,000 kwacha for 4 years, 164,000 kwacha, 523 for a 4-year degree, okay, in arts and humanities, 189,356 for a 4-year degree in sciences. So these are the costs that you're seeing. Diploma, we actually went and ranked them. We checked them out. What are the costs? It's about 75,000. That's what you're looking for 3 years, 2 to 3 years of a diploma. That you're going to get maybe at one of the college institutions. Now we put it here as a hypothetical, but it's not covered. So one of the things that has done this, by the way, in terms of the cost of education, is that when you channel hundreds of millions of kwacha of student loans at only 5 institutions, 6 institutions, what ends up happening, and let's just count the number of institutions here, between UNZA, CBU, KMU, MKU, MU, CHU, and KNU, you've got 7 institutions, sorry, my bad, which are the ones which actually have it. Now, when you channel hundreds of millions of kwacha of student loans there, what are you doing? You're increasing the burden on these institutions, who then resort back and say, we need to hire more teachers, we need to do more things, we need to build more things, and therefore they ramp up their fees. What you've done is you've created demand for seven learning institutions. Now there was a push recently in Parliament to say, can we maybe extend student credit to private universities so that we can expand the competition? And it was shut down by our MPs, the very MPs who are saying, we're there for you, we love. They shut it down because they don't want private sector getting public money, even though most of them know private sector people are getting public money, that we don't want that. And then as a result, they're driving up the cost where the public universities are more expensive than the private universities. This is the cost. So if you keep concentrating the student debt or the student loans into a select group of universities, you are pushing up the price because, Vernon, what is inflation? Inflation is a lot of money chasing few things. So what happens to student fees when a lot of student loans are chasing a few available spots in universities? What happens to the cost of those few available slots? They go up, up, and away. Okay, so now this is the table that we're going to give you so that you can look at it. People take a snapshot of it. You want to maybe think about it, especially if you're young and everything. Think about it very carefully. So let's take a look at somebody who's in humanities. Now, I've also done this as a percentage of the expected earnings so that you can think about this. Currently, Vernon, if you get this 164,523 and you now take it as a loan, your loan repayments at 15% interest per year are 2,654.33 per year. Yay! Chaser, it's a hot year. 31% of your expected earnings. 31. Now, if you get a science degree, which is 189,356, your loan repayments will be 3,054. Vernon, this is some people's whole salary who have just
absolutely.
This is someone's whole salary. 36% of average person's earnings. And by the way, these are your loan repayments for 10 years. 10 years. From age 21, 22, all the way to 31. All the way. I want you to think about that. Now, if let's say someone got a diploma and they're paying 15, guess what now I also looked at diploma earnings, 26% expected earnings. Okay, the average, it'll be 26% of your expected earnings, 1,210. Most diploma holders, they start off with a pay of somewhere, they start off with a pay around somewhere around 3,000 to 4,000. They average out around 4,000 or 5,000. So this is the diploma holder, and you can see how much they're paying. So you can see the diploma holder is paying 26% of their thing in loan repayments, while the degree holder is going to be paying somewhere around 31 to 36%. Look at how much you're hampering the degree holder badly. Now, the estimated loan repayments at 10% interest, the one that's being proposed, comes down to 2,174.18. That's what the arts major will expect. 2,500 for the science major, they'll expect that. And 991 kwacha if we extended these loans, because I've also said extend these loans to diplomas. I know people are saying that CDFs do it as well, but at a structured level, perhaps we should be encouraging people to start school at the diploma and certificate level, because the percentage chance of being hired is still as high, by the way. The percentage chance of being hired with a diploma or certificate is 63% versus 75% if it's a degree. It's only a 12% difference, but it is, look at this, it's double the cost for the education. Okay, it's double the cost for only a 12% increase of a chance of being hired, and yes, a higher pay, which you will probably get. But now look at this, look at the diploma holder only paying 22% most likely. Now let's assume this was zero interest. Okay, because some people are saying, why don't you remove the interest? Why are you earning interest? Okay, fine, let's bring it down. You're still paying 1,371. So one of the options the government can consider is just removing interest altogether. Okay, it's just making people repay the loan back as it is and removing interest. Now, that's going to be a burden cost on the government itself. I understand, but that's the reality. The other part is that the sciences people are going to be paying about 18%, 1,500. So this can be a little bit sustainable. But think about this, Vernon. The first 10 years of your life, paying 1,500. You can see the diploma holder, the person who started their life with a diploma, would only be paying 625 kwacha. And as their life improves, that's going to be contained. So I think that we need to start also talking to people about what they should be studying in order to start off in life. Now, this is a table I've put here for people. What is the employment rate per education level? The employment rate per education level is about you can see diploma holders are 64% employed, 76% for degree holders. Average monthly earnings 7,209. This is as of Labor Force Survey 2020-2021, and 11,185 for degree holders. When you multiply these percentages, you get expected monthly earnings 4,607 for diploma holders, 8,537 for degree holders. You can see now the biggest marginal gain people get is actually moving from a secondary school grade 12 to actually getting a certificate. This is why I'm saying maybe telling people to go straight from secondary straight into degree might be what's causing a lot of kafwafwa in people's lives.
Yeah.
What if we actually just told people to actually transition first to a diploma, then a degree, then your master's? Treat learning like a 20-year project or a 10-year project. Treat it like that. And I know what the problem is. The problem is government jobs demand masters and degrees for people to get management. But if you're young, perhaps the trade-off should now be, do I want to have a loan on my neck for 10 years, or should I take 10 years to get to my degree? Maybe that's the option you can start looking at. Maybe I finish school, go to my diploma, then push myself for a degree while I'm at work. Most of the times, if you're already working, your workplace is willing to fund your degree. And also, Vernon, here's what I would say. Most people who are working also pick the right degrees. So let's take a look at what people are, what are the highest paying degrees as of the Labor Force Survey 2021. What are we seeing? Information technology pays 9,747. It's the highest paying pay per sector. Electricity and gas, 9,600. Professional and scientific and technical services, 8,200. So you can see where. So the question you must ask yourself is your degree the spectrum or the area where the highest pay is found? Because you've got a loan to pay, you need to look at what projected cash flows. What is the probability of being hired in those areas? Now, yes, STEM is the highest paying areas. The problem is HEAL is the highest percentage of people hiring. HEAL being health, education, administration, and literacy. Those are the areas where they're paying the. Now look at the pay scales for health, 5,800 versus 9,000. Okay, 5,800 for health, 7,600 for education. That's at least become a bit more decent. And administrative services, you'll see them down the line. Administrative and support services, 3,721. But then let's get back to this on the other side of the break, where we'll talk about some of the other major stories for our people to look through. But people, take a look. That's the outcome of my analysis of the higher education situation.
Alrighty, back at
We're
it.
back. So I don't know. What are your thoughts, Vernon, before I go rushing into the next part of that on this student loans situation?
I think it's a very good way. You see, some of these things, when you just tell people and they don't see or feel the consequences, they'll feel, this guy, I mean, he's probably never been to Unza and never actually been on a bazar before. They don't know how much we're struggling in these societies. But truth be told, you will be suffering for the next 10 years to pay back those loans. And I think a huge percent of those people, of course, on those programs have little or no idea that they need to repay, and ultimately they will be shocked. And when they get a notice saying now we'll be reducing, or we'll be getting at least a percentage on your paycheck, then they will know that education was for free. And some of them actually will not even like the idea of having to go on a bursary. The trajectory of, I think, I've had this type of conversations with people, and they feel getting to a diploma first, then to a degree, and then you make your way up, they feel that's wasting time. They'd rather they do their degree and get to work. And after work, maybe when they feel they're in the right field, they can proceed to get higher qualification. If not, then they swerve off to study something else. But primarily, this also shapes you and gives you clear direction and perspective of that industry or fraternity that you're in. You get yourself a diploma, you get to work around, get a bit of some experience, and also I'm sure parents would also appreciate the fact that you get a diploma and you start financing your studies further. I'm sure they'd really appreciate that. But instead, we burden them, and this is just one of the reasons why they push you for a bursary, because they feel the pressure is too much to even look at other siblings as well sometimes. So I feel to be fair and to be smart about yourself and not waste so much time. Imagine you get yourself a bachelor's degree in nursing, then after about a year or two into the workforce, you say, this is not really my field, let me try economics maybe. You'd have wasted all of that time, and it's a loan, by the way. So I feel people should really have a clear perspective before they even jump on the wagon of getting themselves into college. And young people, sadly, today, very few actually even pick a field of study. Very few even understand the severity of having to be on a bursary loan that they have to pay back later. So a lot of education has to be done, and they should also just take time and understand what they're getting themselves into, not just crying to be on a bursary. I asked one of the young ladies on a bursary, I think about the day that His Excellency was actually at UNZA. I asked the student saying, you're busy dancing about. Do you know that the same government is going to expect you to pay back with interest later on when you're done with school? They're like, well, now we need it, we're unable to finance studies. It's like, okay, I hope you're aware of that, because immediately you're out of school, find work, because they'll not take it lightly with you. Pay back the loan. you know so our parents, siblings, it is but the duty to see how we can best bring this to light to these people. In the long run, funny enough, you actually will be affected as well. I've actually been in a scenario where Mutwala, you and I are brothers. You go get a loan and you fail to pay back because you didn't have a plan properly on how to pay back. And I'm now affected, and I'm supposed to contribute because you put something, you put a property, a family property as collateral, and the bank is threatening to withhold that property. And now we're all affected, and we'll have to contribute monies so we can pay for that loan. So I feel even as family, take interest to see what other people in your family are getting themselves into. Primarily, you will be affected as well, ultimately. So student loans are good, but you need to think about them first.
I think of student loans the same way I think of entrepreneurship loans, because they're both aimed at getting you access to economic opportunities. Now, I always
Yeah.
tell anybody who's an entrepreneur, be wary of getting loans at the beginning of your business. Go and start your business in a very small way that you can then learn to understand the industry, the customer, the demands, so that now when you start going deeper into making investments in that business, you are now doing it with knowledge of what the demands are. The problem is none of these students have ever worked at all in the fields that they're studying. None of them have gotten any work experience, so they don't know what is required of them. They don't know what the trends and trajectories. Vernon, we just did a thing last week where we said 69% of people are going to have to reskill themselves or upskill themselves by the year 2027. Imagine starting a degree now, and then 2027 comes along and say, yeah, you know those things we taught you? Yeah, they're outdated. You have to go back and do some more training. Okay. This is actually what's going to be happening. The rate of skill change is happening. I think this generation has to be very, very careful because they're now facing the fourth industrial revolution and also the change that software and ICT are bringing to a lot of work. That the speed of change is becoming very fast. You find yourself, you've studied nursing, but you've got no skills in technology. Then you're walking into a hospital that's demanding you to use tablets and everything for data collection. Now you're stuck. You have to go back and train yourself because you can't get an improvement. Now you've borrowed for this as well. What is the issue that you're going to be facing? Okay. So ask yourself the questions, the important questions about where is this going. And that's why I'm saying, people will say, but Mr. Mutwale, you yourself, you have a degree. Yes, I do. I had it at a different time. Okay. I'm a degree holder from 10 years ago. So you've got to understand that this is different. It's different. I was not facing the situations you people are facing. I was not facing the conditions you're facing. You are facing a rapidly changing environment. 10 years ago, Vernon, the highest paying professions were in the scientific space. Today, the highest paying profession is ICT. In 10 years, this has changed, by the way, just in 10 years. So think very carefully. Look at what's paying the most. Look at what the salaries are. Look at the inflation rate. Look at the hiring rate. You need to start making these decisions. And the best way to do it is to first go in with a diploma, because you're dealing with such a rapidly changing thing, is to go in with a diploma, assess the land, and then if you prove yourself a hard enough worker at your workplace can finance your degree. A lot of workplaces do this, by the way. A lot of the developed companies will actually finance degrees of people and tell them, you just have to work here for 3 years after we finish paying that degree, and it's no longer a loan. So why not do that? Why not take advantage of staff development budgets where they actually are there if you're going to be doing that? And you find yourself actually utilizing whatever the workplace is offering to keep improving yourself. I've seen people, Vernon, go from somebody who serves tea to an insurance broker to actually going up in the ladder. I've seen someone do that. In fact, I think it was Trade Kings who recently told their story about a guy who started as a security guard and now he's the legal counsel of the company. Okay. He was using the company he was working for to keep getting educated. He was doing night school. Then he went and started saying, boss, can you send me to school for this? And he kept on using the company to get him that without any interest payments. And today he's got no student debt and he actually rose up the ranks. And you know what you're also getting, Vernon? You're getting experience. Diplomas get you experience faster because the thing that actually pays you, the thing that actually improves you is experience, people. So if you want the flexibility to adjust in an ever-changing work environment, a degree may not be the best thing because it's lumping you with this 10-year debt, okay? And 10 years of debt does not give you the agility through the labor markets. So you might want to reconsider the starting point. I'm not saying don't get a degree. It's still valuable. The path to the degree is the problem. Okay, listen to me very carefully. It's not the degree that's the problem. It's the path that we're proposing to the degree. Immediately going from grade 12 to a degree is lumping people with about 200,000 kwacha worth of debt. And currently, even if you put it at 10% interest, even though these kids are going to start their lives, Vernon, paying 25% of the standard income, that's going to be almost like their actual full starting salary. Okay, imagine such a large chunk of your starting salary going to repaying a student loan. So as much people need to open their eyes to this. So what can we do? One, educating people is important. Know what you're facing. That's one. Two, one of the other things I also want to propose, Vernon, is that perhaps as a society, one of the other things I've pushed is that we need to maybe start incentivizing parents to start saving for their children's college. Okay, so that if parents the parents that can afford can then start to switch towards saving for their children's college. So that is something, so that is something that we will actually put up there, and we are going to round this up. But quickly, just to get people to think about this as we round up, we have got about 100, and this is basically where you're looking at for your children. If you're a parent, and the reason why, if you're a parent, you want to think about this, if your child has got a 10-year student debt when they come out of college, they're going to be staying in your house until they're in their mid-30s. Okay, so you can forget about that. No, they're going to be with you, and they're going to be a burden until then, because they're not going to have any economic capacity, because they're going to be repaying. They're just going to be working to repay back that loan. So you can forget about them contributing. You can forget about anything. They're going to be straight repaying that loan. So think about it this way, and I'm looking at the local degree. If from the day your child is born, 440 kwacha, these are recommended, these are not guaranteed, but these are recommended figures that you should be saving and investing in a fixed income fund that can give you about a 6 to 8% return on investment above inflation. Most of the unit trusts that actually operate, the proper ones, can actually do this. Now, just looking at it very quickly, if you look at it very quickly, 441 kwacha is the signal that you can get. 632 kwacha, that's for a degree if you're saving up for that, and 962 kwacha. My proposal that I'm thinking we should be looking at as a country is that we should be looking at giving parents tax advantage, meaning, Vernon, if you're saving 960 kwacha per child, and maybe they can give you a cap, you can actually reduce that from your taxable income, and then they only pay you after that. So therefore, we're encouraging parents to start saving. Therefore, as many of the parents who can afford to save for their children's education do so, then the student loans are reserved for the actual vulnerable, not a free fall for everyone, but the actual vulnerable who needed that student loan. And therefore, maybe we can even consider reducing the fees and reducing the cost. Perhaps that might be the best way to go. And I'll leave that there.
Appreciate it. Thank you so much.
Thank you very much to everyone. Brennan, have a good day.